Hey everybody, happy Sunday and welcome to episode 5 of the Stock Trading Pit. Today's agenda includes 4 segments as always. Segment 1 is going to be talking with traders. Dan interviews Ray from TraderLion and talks just about his overall strategy and how he looks at the markets. Segment 2 is going to be the broad market recap, SPY, QQQ, IWM, and VIX. Segment 3 is going to be the watch list. I interviewed Jeremy Newsome with Real Life Trading as he goes over some of the stocks he's looking at into the week ahead and further. Segment 4 is going to be weekend chart requests. Unfortunately, since I'm doing this a little early, I'll be on vacation when this airs. We are going to just go over the FANG stocks as well as Microsoft stocks on the monthly side of things and see how the monthly charts looked into the end of January. So sit back, relax, and let's get started.
Hi, everybody. Welcome to Talking with Traders. I'm Dan Ushman, and today I've got a really interesting guest for you, Ray, or as you may know him online as TraderLion. Ray, thanks for being here today.
Thank you for having me, Dan. Big fan of your vision with TrendSpider and the team that you've got going. Love the platform and everything, and thank you for having me.
Thank you. I appreciate the kind words. We work very hard to build really cool tools for people who trade. This is Talking with Traders. For those who are watching for the first time, this is where we get to know the people behind the trades. Ray, thank you again for being here. First question for you. What brought you into trading? How'd you get your start?
So I started about 12 years ago. This would be year 12, 2021. And I started in about March of 2009. My background itself within my trading is engineering based. I'm a graduate in electrical engineering, and I'm also doing my master's just about done in electrical engineering. So being an engineer, basically, you see a lot of numbers, probabilities, and that side of thing. So that drew me to technical analysis and a little bit about, my dad getting me into the game. So I was about 17-ish years old when I started trading and then got into engineering, the whole numbers game, technical analysis, that sort of was very appealing to me, and it's sort of stuck with me ever since. So year 12 going strong. I was pretty fortunate to meet Ross. He's a former portfolio manager at William O'Neill and Company, who I've been working with for the past 5 years. He's really helped me take that next step, and he's part of the TraderLion team. So that's a short but sweet summary on my background and how I got into trading.
Okay. Do you remember what you first traded, the first stock you bought and sold back when you first started?
I do. It was, and I remember this clearly, it was a steel stock, about $3, if I remember correctly, and the ticker symbol was GGB. And steel at the time was, I thought I knew what I was doing with it, buying a low price stock, but I remember that clearly as one of the first trades, and it did go well. And sort of, when you get that, when you're starting out, you get a little bit lucky, right off the bat. That just keeps you around into trading to see what's possible. And that was one of the trades for me that it worked out, fortunately, and it kept me interested in trading. So.
Yeah, I call that beginner slops. I had a few that way too, and it kind of gives you, some momentum, right, to kind of keep going. That led me to my first huge loss, though, right? So for me, it was National Semiconductor as my first trade, and I totally did not make money on it. So I'm curious. You mentioned you had a mentor, Ross. That's a topic that comes up in these interviews quite a bit. The value of having a good mentor, especially when you're getting started in trading. I'm just curious, and I'm sure a lot of people watching are. Where did you meet him? How did you get to know him?
Right. So I met him just through the Twitter space, really, right? I had eventually where I started to where my style was at that point when I met Ross was completely different. It was sort of the Ken Slim, William O'Neill space, and he was a former portfolio manager there. So we sort of, we touched base. I liked what he did. He had a newsletter going, and then, it took a couple of months where we just chatted back and forth, and I was fortunate enough that, someone of that caliber was, even entertaining people or talking to people in the Twitter universe or StockTwits even. So that's, that's how it started, and to a point where we're now partners under the TraderLion hat. So eh, when I met him, he sort of took me under his wing. So, I learned a lot from him. He's about 3 decades into the game, whereas I just finished my first decade. So, uh, picking his brain every day, it sort of, things started to click, I would say, the past 7 or 8 years, just being around him all the time. So,
Definitely.
yeah.
So when you're trading nowadays, I'm just curious about your style. Do you tend to swing trade? Do you build big positions and do position trades, where you're accumulating over time and, then distributing over time? Or are you more of a day trader? What's your style like?
So my style, I mean, I wouldn't classify myself as one or the other, or basket myself into a particular category. It's just the way I think about trading is it's price action, volume, and if a trade is going your way, if the stock is acting right on the charts, if the market is doing what it needs to do, then I will hold as long as that's the case. Now, there will be trades where I'm out, say it could be the same day, or there will be trades where I'm in for 18 plus months, right? So it really depends on, how the stock itself is acting. Does it allow me to stay in it for a very long time? Does it push me out fairly quickly? So from my point of view, I'm not really big on classifying that, or putting a label on my trading. It's whatever market environment that we're in. If I can adapt to it within the edges that I have in place, then I will trade that so that the market becomes a source of income for me. So it's not really, swing position day. If I had to put a label on it, it would be price action and volume trader or a technical trader.
Got it. And I'm with you there, man. I think a lot of people pigeonhole themselves into like being a day trader, right? And that means they get out into cash every day, right? And I think the best gains are earned overnight, right? With gap ups and things like that, right? In fact, I've back tested this in the past, where if you just buy SPY at close and sell on open, you'll make a lot more money than the opposite of just buying on open and selling on close. So I always thought that was interesting.
Yeah, that's one of the, I think someone else did a study on it as well. It's just most of the gains in the market since the April follow through day, is what they call it in the William O'Neill Canceling methodology, has been overnight in the futures market, whereas the market itself intraday does not move much. So with you there. I mean, so again, it boils down to, if a stock's acting right, if it's not, my sell rules don't trigger, I don't see a reason of getting out, then, I stay in it as long as I can. If it kicks me out, say an hour later, then that's what it is. So it really depends on, the personality of the stock. If my thesis going in before I buy a stock, if that is correct, I will be in the trade for a very long time. If it's not, I will be out. So, putting a timeline on I would say a probabilistic decision that you're making on a particular symbol, you don't really know how it's going to end, right? All we know is our risk in the market, and that's really all that we could really control is our risk. So
that makes a lot of sense. So I take it you probably don't trade options much then?
No, I mean, I stick to the equity markets. For my trading, the options market has been of interest to me, but that's still something I'm very, very, I'd like to study what I'm doing. So, I mean, for the past 6-7 months, that's been a focus of mine to learn first, to build my edge first before I step into that realm. So the options trading, it's coming, but for now, I mean, for the past 10-ish years, it's all been equity markets.
I'm the same way. I really struggle with options because, like you said, you have to be right about direction and timing, right? And that's twice as hard, if not more.
Right. I mean, and I think it's important that traders, if you want to limit yourself to something, just limit yourself in a way that you've studied what you're doing, or you have a solid thesis for, say, stepping into the equity markets, or have a solid strategy behind what you're doing. So I could go out randomly, buy a call, hope for the best, or you can have a solid strategy, study the markets, really, define your edges and execute your edges, be very systematic in how you go about things. We're very big on that under the TL hat. So.
Got it. Do you have like a holy grail setup, or like your favorite thing to see on a chart that you do just dive right into?
I I would say one of the best things on the charts that I look for would be the gap up with a earnings catalyst. So something like a pins recently, last quarter, around the 37-ish mark. Actually 2 earnings ago, a Snapchat that gapped up, or something that shows you that institutions are positioning in the name. Um, and it shows up on the charts as, highest volume in over a year with a high closing range, right? Or highest volume ever on a stock with a earnings catalyst. That shows you there's new institutional interest on the charts. That's a visible sign that institutions are positioning. And there's no reason to second guess that, especially if you get a high closing range on earnings day. So if I had to pick one, I think that would be the one. And it also shows you that, when institutions are buying stock after earnings on a name like Snapchat or pins with, 100 million, 200 million shares being traded on the day, that's telling you that the risk appetite is also high in the markets, right? So it's also telling you that, institutions want a position in this name. Did they see something, from a market point of view, but also an individual stock point of view aligning to create that sort of volume?
Okay. Do you tend to? I'm just fascinated by this because it's the opposite of how I trade. I look for the stuff at the bottom of the dumpster, right? And try to play reversals. So it seems like you prefer to buy high and sell higher, essentially.
Right. So the basis for my trading is the William O'Neill Cancelim methodology, which basically is combining the fundamental side of things. So they will look at quarter over quarter sales, quarter over quarter EPS, future estimates, institutional ownership in the name, and then combine that with the technical setup to make a trade that puts you in a position to potentially have a winner that could be 100%, even after being up 100%, right? So something like a Snap, Pins, and Cloudflare recently, in the current trend. It's just countless names. It's been 2020 was a really good year, and 2021 so far has been a good year as well for the growth stocks, right? And the canceling methodology, and that's my basis. So we've been doing really well with it.
It's good to hear. How do you? What's your approach to managing risk in a trade? How do you set your stops, and do you use a hard stop or like a mental stop?
I go for mental stops. So basically, if I'm always at the desk, or I have access to my positions over the Interactive Brokers app, right? So I'm all for mental stops. I know where my risk is going. I do a lot of my planning is done when the market's closed, right? There's nothing that I try to do outside of my plan. So I have a daily routine basically going over, I write everything out. I evaluate current positions. I look at what I can potentially position in. And if the market does what I've planned the night before, I will initiate new positions. And for those, I know pretty much where my risk is on my existing ones, where my risk is on my new ones. And if the market doesn't do what I, planned, the night before, then I'm on the sidelines and just watching. So
it's smart. And for those watching, that is something that has come up over and over when I talk to a trader who is successful at trading and consistent. One of the common themes is you plan your trades at night, on weekends, and then you simply execute your plans during the day.
yep.
That's great. So I'm curious, feel free to throw anything out here, but what sectors or what stocks are you kind of looking at going forward next, few weeks, few months?
Right. So recently the renewable space has been hot, right? So that's your plug, something like a plug, SPWR, FUE. So basically anything in the EV space has been doing really well. Your Tesla, which is the largest liquid leader, recently added to the S&P 500. So that's a theme that I'm constantly trying to position in, if I could find or define my risk on a particular chart. Another one that's going to be coming up, or is trending, is the 3D printing stocks, right? Something like a DDD. That is a theme that's sort of evolving or coming up. And then we also have just the application software names. They're still trending, something like a Cloudflare, DDOG, Zscaler. So that's third. And then the fourth one, which I think from a market structure point of view, that's always important and has been important for the past however many years, is the semi space. So I'm trying to monitor and see how AMD, after its earnings reaction, which wasn't so great, how that's acting, because you need the semi space to be good for the markets to sort of be good. So I'm watching, AMD, Nvidia, the two liquid leadership stocks in that name, in that space. And then lastly, just I'm big on market trend, right? Which way is the market trending? Because you need that wind behind your back for you to make progress on individual stocks. So how's the market doing? Is the trend, you want to position yourself in a way, or you want to position your portfolio in a way where it's reflective of the market trend. We could fight as much as we want. We could come up with different theories in our heads. But at the end of the day, if you aren't with the trend, you aren't with the trend of the markets, you're not going to, be making consistent money. So if that's up, so be it. If it's sideways, so be it. If it's down, whatever the case might be, just have a plan that fits the trend of the market. And you're not looking to, you can't muscle the markets with your opinion as much as we want to do that. Right.
Yeah. Hope does not move price.
So we just have to, that is, I think, one of the last things that people talk about, sector stocks, but you need a good market. You need a market where institutions have the risk appetite to be positioning in names. You see clear themes in EV space or the software space or the semi space. So that's really the biggest, Russian doll, which is the markets itself.
Yeah, the market as a whole, right? You need that wind against your back. It's always funny when people talk about semis. Intel never comes up, and if you look at Intel's monthly chart, it's forming a beautiful base. Like, it looks like it's starting to form a handle on a giant, 11-year long cup and handle, right? And I wouldn't be surprised to see that test, its all-time highs from 2010. I can't even remember, but it was like $80 or $75 a share. I've had my eye on Intel because I do think when Intel finally breaks out, it can be pretty monstrous given the length of its base. I mean, it's a massive base. So
yeah, I mean, for my style, I'm, like you said earlier, it's just buy high and it will, that buy high and sell higher, right? Yep. So it's completely, the way you see markets, I guess, versus the way I see markets. It's just a matter of strategy. As long as it works for you, right? And your lifestyle or your personality, that's all that matters, really. There are different ways. There's no one single way in the markets to say, this is the only way. So there are many different strategies, many different ways. So for me, an INTC, it doesn't even make my watch list. Whereas for you, who's looking at, say, the monthly chart, for example, you're looking at the wider base, that fits your style. So
Yep.
it's always good to see that different point of view.
Yeah, and that's the beauty of the market, right? You can trade completely different than I trade, and we can both make money in the market, right?
Right.
It's very personal. It's it's like the clothes you wear, right? How you trade. That's fascinating. Thank you very much for sharing that. I am running out of time, so I have to go to my last question. I'm getting some angry messages here. The last question I always ask everybody, and it's the same question, and I think it's one that a lot of people wait for. What advice would you give someone brand new? They just got their first broker account. What would you tell them?
I would say read books. People don't read books because they think the knowledge is there, right? It's a matter of putting your ego, toning down your ego a little bit and actually try and listen to the information that's presented in the book. I would say, grab How to Make Money in Stocks by William O'Neill. That's been the basis of my strategy. The Livermore books, the Darvis books, the Market Wizard series. That's another amazing one for new traders to get. The other thing I would say is focus on yourself, focus on your process, focus on improving incrementally based on how you were the last month, how you were 3 months ago, not based on some trader that's on social media. That shouldn't be your bar. Your bar is where you are in your own personal journey and how you improve upon that journey. That should be the top priority. You find that you in your trading. Don't look at others or others' success and make that the bar, because you won't. When you start out, we all start out like idiots, right? And we lose money, we make rules, but we're doing that to ourselves. So there's a you in trading, and if anything, don't forget that you.
That is fantastic advice. I hope everybody took that in. I'll grab the names of the books you mentioned after we record here, and we'll put them in the description below. So anybody watching this, we'll put some of Ray's favorite books in the description, so you can just click on them and get them if you'd like to. I also agree with How to Make Money in Stocks by Will O'Neill. It's a great one, and I think everybody should read it. And then for those watching, we're going to put in the description below a link to Ray's Twitter, to his website, TraderLion.com. If you want to get to know him a little more, maybe, explore his community, that would be a great place to start. And Ray, thank you for being here. It's been a pleasure to have you on.
Awesome. Thank you, Dan. All
right. Take care. I'm going to head back and give the show back to Jake. So thank you, everyone, again.
Alrighty, let's look at some broad market charts into the month of February. As I mentioned, I will be out of town when we generally do the broad market analysis. So I decided to go over the monthly charts, since the monthly charts are definitely going to still be relevant by the time we air this. So SPY, really quite a week last week with the whole GameStop and everything. And I think a lot of other people thought this was going to cause some liquidity issues in the market. Well, that was a big wrong. So everyone got humbled and we just went straight back up. So what I want to point out here is the fact that we did really test this broadening formation resistance acting as support perfectly on Friday the 29th. And then we just really didn't even get to test this area again for February 1st or the 2nd. We just went straight up. Now, keep in mind that the monthly candle is still very young. A lot of things can happen here, but for this being so early on, definitely quite a move so far. But remember, you never want to really anticipate a candle until it's pretty much close to being closed. So we can obviously take a look at this January candle and see that we did bounce off this previous resistance. However, with this candle being so young, we really can't come to any conclusions other than it's a good start to the month. Now, on top of that, we also have this win rate of 75% for the month of February. So since 2010, why did I do this since 2010? Well, I want to look at pretty much since the bull market started, and we want to look at seasonality within these cycles. A lot of the time when I look at, let's say, day of the week performance for a specific stock, let's say I'm looking at Apple, I want to look at the day of the week performance since we bottomed in March of 2020, because if we take into account the days of the week that happened during that big move down, we're kind of skewing the data. So we really want to look at seasonality within these cycles. This bull cycle has really been going on for about 10 years now. I guess you could call this little blip in the radar this March crash, a very, very short bear market. But all in all, I'm really looking back at the last 10 years, pretty much when we first started, maybe late 2009 was the initial start of the bottom during the financial crisis. But over the last 10 years, 75% of the time, February has closed green versus January. So definitely showing some historical strength on the price performance side of things, as well as this nice bounce off, this previous resistance acting as likely support. We'll see what happens going into the rest of the month. Now, if we did continue up, this 1.618 extension would be an area to watch above. The extension is a function of the measured move from February 2020 down to March of 2020. So remember, you can always create an alert at this line. You can add your sensitivity, and then you move along with your life, and you don't have to stare at the charts all day, especially if you're more of a position trader looking for that longer term move. So remember, the sensitivity alerts are always nice to use on trend lines, Fibonacci levels, etc. QQQ, this is one that's getting interesting. We are getting pretty close to this long-term level of resistance. We've got this pretty big broadening formation here, and you can see that we are starting to grind up really close to the top here, as we've done in the past. So, is this finally when we're going to actually break out of this, or we're just going to continue to trade within this formation? We'll just have to see. But same thing as SPY. February has a 75% win rate over the last 10 years. Pretty strong seasonality. But remember, just because you have strong seasonality does not mean that you're always going to close green. It's just telling us past performance, 75% of the time we have closed green versus January's close. Now, what's interesting with the Qs is July has a 100% win rate over the last 10 years. That's some pretty fascinating stuff. So if you haven't used seasonality, definitely check it out. It's a really powerful indicator to complement your technical analysis. IWM, we have this continuation up. We pretty much opened up right in last month's wick, and we're just moving up, at least for now. But you can see that this 1.618 extension from the measured move starting in August of 2018 and then measuring all the way down to March 2020, that 1.618 extension is right around 220. Remember, we always want to use a zone and not just a precise level. That's why I have this sensitivity zone around this area rather than just having an alert right at this 1.618 extension. Now we'll go to VIX. VIX is one of those that, as we always talk about, it's not something that you really always want to chart because it does have a mind of its own, and there's a lot of forces at work other than technicals on the weekly side or the VIX side of things. One thing I was going to pull up though is the weekly chart, and notice that I really don't use trend lines much or anything on the VIX, but this is quite interesting that we did pop up right to this previous resistance area. Maybe it's a coincidence, maybe it's not, who knows? I'm not there to make judgments on that. I just think it's an interesting correlation here that we did really test that perfect area above. And remember, I'm using this zone rather than just one trend line. So something to consider on VIX. Another thing to consider is into February and March, VIX has a 42% win rate in February over the last 10 years and a 27% win rate for March. So definitely some weakness in the coming months, at least from a seasonal perspective and a historical price action perspective. So that is an overview of the monthly charts and the broad markets. Let's move on to the next segment, and hopefully this was useful. Alrighty, everyone, into segment 3, the watch list with Jeremy Newsome, founder of Real Life Trading and an epic trader, one of my favorite traders, honestly. He's just got such a groove with the market. It's kind of fascinating. So Jeremy, today we're going to go over a few stocks that you're watching into the coming weeks, even days. So first of all, can you tell a little bit about yourself, your community, and let's just jump right into to some charts.
Yeah, I want everyone to know, full disclosure, me and Jake have a giant bro crush on each other, and it's fair. It's open. Everyone knows it. So yeah, Jake has always inspired me to be a better trader just because I love his charts. I love everything he posts, and he's really always outgoing, energetic on Twitter. So him and I always go back and forth with charts and information. And my mission is to enrich lives with mentally liberating education. So we do that with obviously stocks, options, cryptocurrencies, futures, commodities, Forex, whatever can be traded. If it has a chart, it has a heart. And I love it. I love the markets.
I love it. I love it. Well, so, as far as the charts we're looking at today, what are you thinking as far as a little bit of a time frame,
Yeah.
everything we go over, just kind of what you're seeing as far as that goes. And then, maybe if you're trading the option side, if you're trading the common stock, but obviously full disclosure, everyone, we're just talking about his style and what he's trading. That doesn't mean go buy this and mimic him, but just to get an idea of what you're seeing and how you're trading it.
Yeah, man, absolutely. I mean, I range all forms of trading time frames. Like I'll do anything from the 1 minute chart to the monthly charts, day trading to long-term investing. I love anything that has to do with the market and stocks. And short term for me, these particular charts we're looking at today on the watch list is most likely somewhere around 2 to 5 week time frame where nice little momentum play, nice candle play, nice breakouts, and just getting excited and ready for some quick pops.
Love it.
Yeah. So here's what I got. First on the list, I'm looking at Zoom Info, ticker symbol ZI. Full disclosure, I do have a position in Zoom Info, and I have currently 1,600 shares of this one. The reason I was playing this one, number one, is what I love to do is go back in time when I'm looking at a chart. And if I can see a bunch of yeses that worked previously, it helps me get into a position now. And we can see numerous double bottoms on Zoom Info. I mean, here's a double bottom right there. Gorgeous double bottom, realistically. I mean, just absolutely perfection. And we have another one over here. Both of them working really, really well. And then guess what? Yep, that's right. Another double bottom. 3 of them back to back to back, all continued higher, which again tells me higher lows, pressure is building. So when this hammer came up in one of our scans using TrendSpider, duh, right? Very, very nice hammer. I loved it. And then boom, we get another one. So what it does for me is it starts going, all right, well, I'm going to keep increasing my conviction on this particular trade if I keep getting signals that I like. Next day, inside candle. So you have hammer followed by an inside candle. Are you kidding me? It's an easy setup. You got to play it because it's compression. If it's going to go, get in. So entry was approximately here, 49.33, and stops, as you know, Jake, they're just right below here, right below the wicks of these candles. And then today you had another hammer yesterday, which means I added to the position. I got into more above this hammer at 52.54. So my goal is probably to hold some of these shares into some of these highs, 60, 62, 63. And if this works, guys, I mean, this could be for me, personally, it'd be around a 10, 12 grand trade, which is about 10 R's or so, 10 risk units. And that'd be amazing. That'd be a really, really phenomenal trade. And I'm watching it closely. I like the volume. I like the breakout. I like the close. I like the candles. I like the trend. I even like the company. So I'm in it to win it.
Love it. Love it. And so for levels above that you're watching, are you looking at just the previous high that we tested? What is that, June?
Yep.
Yeah,
exactly. So yeah, right back here. This is pretty much the IPO highs. I love playing new IPOs. It's kind of like one of my favorites. I'm just a big fan because there's not a massive amount of indicators. I'm a candle specialist. I'm a sentiment specialist, and just being able to read the chart. That doesn't mean this trade is going to work, but it does mean that I can look at it and I can get a good feeling for what I like and for what I want to see. So yeah, trading up into the $60-ish range. It'll either maybe I'll trim some at 59 and then try to hold the rest until 64. That'd be a huge trade. So I'd be excited about it.
Love it. Love it. What do we have next on the list?
Oh man, American Well, ticker symbol AMWL. So this is a competitive company to another company I'm about to talk about. And again, I mean, you liked it. You got the woo already. We're woo boys on this chart. Like we can just clearly see massive volume, good volume. And this was a really, really intriguing position right here. One white soldier candle, pretty much a Marabozu back on January 14th. It was a gap and go, trapped everyone on January 13th. Tons of bear volume on January 15th. And we broke out of that really nice flag pattern with, again, a strong close. So if we zoom out, to me, this is a teledoc or telehealth, telemedicine competitive industry and company. I really, really do like this breakout and retest of old resistance, new support. I really like the candle that came in today. So I call this like a new white soldier candle, which means it opens and closes above the prior bearish candles open and close. So for me, I'm just going to watch it to get in above. If it breaks above 37, stop loss, always have a stop loss in every position ever, probably 397. So that's a $3 risk. And upside, if it continues to make new highs, 45, 46, 50. But I like this chart actually just in general. I like this company for this year. This is what I'm watching really, really closely because let's face it, COVID's not going to go away for the next year or two. Unfortunately, neither is the flu or other sicknesses, diseases, pandemics, whatever. People are going to want to go to doctors, but are they going to want to go into a doctor's office? Or are they going to want to stay at their house, right, and do it from their phone and get the medication and get the prescription they need, get it ordered, get it sent to their house without leaving? They're going to want to do that one. So that's why Amwell is high on my list, along with your boy, Teladoc.
Woo! All righty.
I'm in Teladoc, bro. This I am in to win TDOC. They bought LVGO not that long ago. Look at this trend. Like technicals don't work. Yeah. All right, dude. Whatever. Look at this. Just bang, 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 bang. Just gorgeous bounce off the 100 simple on a weekly. You have this compression. This traded sideways forever. Massive amount of volume back on the week of November 9th. And the very next week, we closed above it. Retested it with a hammer, a bunch of different hammers, broke out. I just love the trend. I mean, look how clean this 20 and 50 is on a weekly. Look at that.
Hello.
I know. So then on the daily chart, pop it back into the daily. I actually do love this pattern. Nice little small hammer here, and it gapped up the next day, forming a bear candle. Now you have an inside candle. If we hop over here really quick to the drops, if we're looking at the drops are king. Look at that nice pressure to the upside. You got two bear volumes here. We actually close above all these bear volumes. I'm thinking this is just going to slowly continue. I am in. I have a position on Teladoc. I like it. Look at this. Look at that drop. How all that volume was pressured to the upside, inside, and then wow, there we go. Off to the races. That's a gorgeous.
Luciano. I love it. I love it. I don't think I've seen you use raindrops before. So this is absolutely awesome to me. I'm excited to go over this stuff more when I come to your conference in Miami in late March, and we'll do some raindrop trading.
So something you don't know about me, man. Every time I hear the word raindrop, I think of that movie Along Came Polly with Philip Seymour Hoffman. Have you seen that?
I'm not great with movies.
It's all good. I'm gonna send you a YouTube link, and you're gonna watch it, and you're gonna laugh. It's very funny. I'll send it to you on Twitter. But yeah, it's a movie called Along Came Polly. Ben Stiller, Jessica Aniston, Philip Seymour Hoffman. Great film. Check it out if you guys are bored. Want like a date night movie or something to watch. Okay, next one for me, Upwork, UPWK. So I do have positions in Upwork as well. I am long on this one, and my main focus on this is just let the trend continue to be my friend. This hammer, I'm a huge hammer fan. Love this hammer. Yeah, man, that's it. MC is like coming to give you the trade. That's it. It's the perfect hammer. Like if you want to analyze what sheer perfection, this one. That is Chris Hemsworth coming to your house, right? The hammer of Thor himself. Like, all right, do you want to get in or not? Like, what's your thoughts? No, that's back at 40. That's up 20% from 40 to 48. Unless I'm bad at math. Like that's an amazing run. Gorgeous trend. And just buy the dip on this one. It looks really strong. If it pulls back into 40, bang town. And then I'm just going to see if I can ride this up into the mid 50, 55, 50 easily. I think into March. It's just going to slowly grind higher, and it's going to be a powerhouse, man.
I love it. So, as far as your, like when we're in kind of price discovery mode like this, where we haven't really had any price memory from previous times, are you using any fibs or anything like that as upside targets, or just a function of, 20% higher, or what exactly how do you formulate those targets?
No, man, that's a great question. And honestly, yeah, it's a lot of fibs for me. I normally do fibs on a little bit of a longer time frame. It's harder on newer companies like Upwork. I mean, because you have to ask the question, like, how high could it go? It's like, I don't know, whatever. Like it could just keep going. But yes, I do generally use fibs. On this one, I haven't really found an amazing range. It just kind of seems like it keeps on going. So I haven't measured it. I'm just going to kind of keep waiting until it starts to peter out. My signal for me generally is like, all right, dude, you got to like peel this one off, is when you get tons and tons and tons of volume, similar to this, but not on a gap, but maybe after a gap. If you have tons of buying volume, which tells me that a lot of noobs are starting to pile in, that's when I'll potentially start to sell to them. And or if there's a large bear volume spike, maybe I'll get a little bit concerned. But normally I just trail it until like some type of moving average cross happens or some type of really bearish move happens. But I'm just gonna wait this one out, dude.
Got it. Got it. So it's more or less kind of a function of you are looking at some type of cross or some type of, reversal rather than just because a lot of people are like, oh yeah, I'm selling at 55. And it's like, well, where did you get that number? So you're just kind of measure or monitor the market and see if there's any changes. And it's not necessarily, it's got to hit this price.
Correct. Yeah, that's normally the case. And if it does, like if I do hit a price, I'm just okay to sell out. If it's a nice round number, then that's fine. But generally, unless it just changes direction, I'll just kind of keep hanging in there for a bit.
Hey, makes sense to me. Well, the beautiful thing is we also have the Mr. Jeremy Newsome candlestick patterns on TrendSpider. So, that's something that I wanted to point out. Jeremy teaches all these different types of candlestick patterns. You probably heard a couple different ones that he has talked about, and maybe you haven't heard of them because they're kind of unique to him. So all of these different ones that you can see on the chart, he just turned on the pattern recognition. And so if you want to train your eye on some of these different things, the pattern recognition is a great tool to use because you can essentially kind of see these things visually. And then it really shows the power of TrendSpider. It's not just for technicals, it's also there for education. You're training your eye on what to see, and that's something that's really powerful, especially when you have a specific type of candlestick pattern that you may not be finding by Googling. This is Jeremy's stuff, so we pretty much programmed it in there.
Which is so epic, man. This pattern, again, like I mentioned, I'm in bullish on Upwork, but this pattern helped me go in relatively heavy. Really, really good volume, perfect gap. This is a wicked pair candle. Then you have a second wicked pair. Then you have an inside candle that's inside of a hammer in a bullish uptrend. Dude, I mean, wow. I got into Upwork. So I'm in this still. And this, again, absolutely, man. The patterns, love the fact that they're there. There's so many good patterns that people can scan for. I mean, you have the ability just to take this out, clear it out, and just scroll through these and study them, right? Spend a few hours a week just going through some patterns, clicking them, seeing if they worked, and let something speak to you. That's my thoughts on it.
Hey, I love it. Well, these are 4 great setups. You are the master, the champ, as you like to call everybody. I love when you call me a champion. It makes me feel so good.
Thanks,
so,
man.
hey, I'm looking forward to seeing you next month.
Yes.
It's been too long. I think the last time we saw each other was at Nashville retreat, which was too long ago.
Yep.
And that was actually when I flew home and literally flew into one of the biggest hailstorms Denver's had in a while. And that was, I thought for sure I was going down. So glad that I'm still here after that. But yeah, no, definitely some great ideas going into the weeks ahead. And yeah, any last words? Just, one thing I'll say is thank you so much for, really putting all your time and effort into teaching people. I think it's really cool. And I've really seen a lot of people grow from your stuff. And, I think it's just awesome what you're doing. And anything else you want to mention about real life trading, go for it. This is the time. And yeah, man, thanks so much for being a guest.
Dude, my pleasure. Always excited to be doing anything that you're doing. And yes, ladies and gentlemen, if you get a chance, we actually have a really, really cool brand new day trading program that just came out. It's free, obviously, because it's real life trading. We just give everything away for free. So pop over here and check it out. Day trading techniques, advanced option trading, intermediate trading, which is all about charts and indicators and candlestick patterns. And then, man, I think it's an amazing time to be an aggressive trader, to be an active trader, because the markets are so hot right now. While they're hot, play them hot, make some money, protect yourself, lock in those gains, reward yourself, and then let's have a great time and enrich lives, ladies and gentlemen.
I love it. Jeremy Newsome, everyone, founder of Real Life Trading. Thank you so much for joining us again. We'll see you soon, and let's move on to the next segment.
Thanks, brother.
Alrighty, let's look at some individual charts. As I mentioned, we didn't get to put out the chart request post on Twitter since we did this a little earlier in the week with me being out for vacation. But what I did want to do is just go over the FANG stocks as well as Microsoft, because you might as well throw that one in there too. And what we're doing is we're just looking at the monthly chart, the monthly seasonality, and seeing what's going on. Now, On Facebook, you can see that as always, I'm at least for now, as we go way on into the future, we're not going to continue to anchor from this March capitulation point. But for now, we're anchoring from this March capitulation. This after the market reset, we want to see where these shares are aggregating. In this case, you can see that we have this flag here forming. We also have this volume shelf above. Remember, whenever the price is below the volume shelf, this is initially going to act as break-even supply. Because remember, if you bought Facebook way up in the 270s and it went down all the way to the 240s and 50s, you're initially going to be back to break even. Some people are going to sell, take their money out, move on, and that adds to the supply, at least initially. And then once that supply is digested, a lot of the time, these shelves can become a launch pad if the price can get above that area. So all in all, Facebook still within this flag. That's pretty much been in this flag for months at this point. And you can see that February over the last few years, we IPO'd in 2012, so we're not going all the way back to 2010. 44% win rate in February, 50% win rate in March. So not necessarily the greatest, but at the same time, January has a 67% win rate, and we had a pretty red month for January. So as I mentioned, seasonality is not an end-all be-all. It's just a great variable to look at with the charts and get an idea of what's complementing each other, what's kind of not the same. So that's Facebook, Amazon. Let's look at really this volume shelf. And this is kind of a great example here. So we're anchoring from the capitulation point again. I'll highlight that here. March 2020 is when we flushed. And actually, this wasn't a low. The real low is back in December of 2018, but I still want to do it from this market flush here. You can see as the price was way down in the 2900s, this initially acted as a level of supply. And you can see that for about 3 months here that the price really had trouble getting through this volume shelf. And now this volume shelf, as supply is digested, is finally starting to act as a little bit of a launch pad for price. Easily go in, create an alert at this previous high above. And maybe that's where you set your alert for taking profit, adding, whatever your style of trading is. Now, February for Amazon, 50% win rate. However, look at March and April. Huge win rates here, 73%, 82%. So we'll have to see what February does. 50-50 chance, at least on the historical performance here. And remember, I did just say chance, but I didn't necessarily mean a chance. I'm just saying over the last 10 years, there's a 50% win rate. 50% of the time, February is closed higher than January. 50% of the time, February is closed lower than the January close. So remember, these are not probabilities, they're historical performance statistics. Going into Apple, Apple has this really strong ascending triangle forming here. If we anchor the volume by price from this March capitulation, you can see the volume's a little clunky here. And sometimes you'll have that on the monthly chart, at least when you don't have a lot of candles. This is only about 10 or so candles. And you can see that the volume by price gets a little clunky. If we anchor the volume by price from that same point on the weekly chart, you'll definitely see that this volume by price gets a lot more fluid. And you can really see, this is pretty fascinating, how the price is literally just stair-stepping up these volume nodes on the volume by price since this March low. So all in all, we've got this kind of ascending wedge here on the weekly side, but on the monthly side, we do have more or less of this kind of coiling formation with higher lows here, and then you do have a little bit of a wick through this these previous highs here on in January 2021, but still I'm looking at it more as an ascending triangle. And if we break out, this is where you'd throw on a I would just take the measured move from this huge September candle, and you'll see that, the 1.618 is around 160. So we'll see if we get through that area. And if not, then we'll reevaluate. If we did anchor from, or if we did measure the move from here, you'll notice that we are already beyond the 2.618. So if you did want to throw on, let's say a 3.618 extension above, that would put us literally almost right around the same area, around 158 to 160. And remember, these are always zones. They're not precise areas. So you do have a lot of leeway there a lot of the time. Oh no, it was 157.50. No, it was 158. It's pretty much the same thing. I mean, unless you're just really trying to hit something right on the head, a lot of these areas are zones. Going into Netflix, if I can type it right. Netflix is one that is finally starting to possibly show some strength here after literally a 7-month range that we've been trading in. And it really needs to get through this this upper area around, let's say, 590, pretty much just the high that we saw from earnings back in January. And if we break through that, that's where things get interesting. And the same thing, January has an 83% win rate over the last 10 years, but January was red for 2021. So seasonality is something you want to take as is, right? It's not an end all be all, especially when you're looking at statistics over 10 years. There's 83% win rate's pretty strong, but there's always that margin of error where that doesn't necessarily have to mean anything. But all in all, so far for February, a decent candle. But remember, there's so much time left on this candle, we can't really analyze that. We can only really look at the January candle, which is actually closed. We did hit a new high. That's something to consider. And we are starting the month off pretty strong, at least for now. And notice here, March, April, May, you kind of get this lowering of the historical performance here over the last 10 years. So we'll have to see what happens into the coming months, but still well over 50% win rate, at least over the last 10 years. Google is the next one we'll go over. Google's kind of already kind of leading the pack, honestly, and it hasn't really traded in a range like some of these other ones. We've continued to hit these higher highs over the last few months. And then if we do continue through the 1.618, which we're doing now for February, you maybe want to throw up a 1.618 extension with an alert way up around, let's say, 2400 area. So that's Google. If we do anchor the volume by price from this March low, you'll see that we kind of had that same effect as we did on Apple, where you're kind of stair-stepping up these volume nodes and kind of clear skies above. There's no holders up here because this is hitting all-time highs, and that can create prices to move quickly because you don't have any of that break-even supply above from previous price action in the past. 57% win rate, 50% win rate, and then 43% win rate for February, March, and April. So this is definitely declining. This is one that did close in line with January having an 86% win rate. And you can see here that we had a pretty strong January. So Google is definitely looking strong, but anything can happen with so much time left in the market. Anchoring the volume by price from the March capitulation in for Microsoft, we have an interesting setup here. We pretty much have the same exact setup as we did with Netflix. I was trying to remember which stock that was. 1, 2, 3, 4, 5, 6, 7 months pretty much trading in the same range. We did pop up a little bit during earnings before pulling back for January of 2021, but we did open above this resistance line here, and we are breaking out at least for the time being. So that's interesting to see that we also have this volume shelf that really acted as a base for price to move up off of over the last 3 months or so. And then the seasonality is okay. January 67% win rate. That was in line with what we saw so far. February has a 58% win rate. So it's greater than 50-50 over the last 10 years, but still it's kind of a mixed bag. Now March and April do have slight upticks in the seasonality, so we'll see if that correlates with higher price action. But all in all, these are the FANG M stocks, Facebook, Amazon, Apple, Netflix, Google, and Microsoft into February. And hopefully this video, I always say that video. Hopefully this recording was useful in understanding how we're looking at the monthly charts into the month ahead. And always crucial to remember that you don't want to look at the monthly candle the first week of a month. That's why we're at least seeing what's happening, but we're really just looking at this January monthly close, and that's what we can really do the analysis on. So hopefully this was helpful, everybody. Thank you so much for joining tonight. Remember, if you want to try any of these features out, you can simply go to TrendSpider.com, start a free trial, and if you have any questions, let us know. We have one-on-one demos here at TrendSpider when you do have a free trial going, to make sure that you understand the product and what it can be used for. We don't want people just signing up and not knowing how to use this. We want to make sure that you're using this to the best of your abilities and utilizing it the way it should be used. So our customer success team is great. They really help out understanding the product if you don't have a good grasp on it. And everybody, thanks so much. Have a great trading week in the week ahead. And let's see what the rest of the month of February brings us.